Hey people, what's going on? Welcome back to the channel. Hope you're well and in good health. Okay, today we're going to take a look at an economic article about the UK and the potential risk of the recession. So it says here, it's a Guardian article, UK recession risk grows as higher interest rates weigh on firms. And before we dive in, don't forget to subscribe to the channel to keep up to date with all that's happening in the finance world. Okay, so Britain's economy is growing risk of recession, right? So industry figures showing that the sharpest monthly fall in private sector activity outside of the pandemic period since the financial crisis, right, is a sign that higher interest rates and the cost of living crisis are combining to depress consumer demand. The latest snapshot from S&P Global and the Chartered Institute of Procurement and Supply showed a steep drop in the UK's dominant service sector and manufacturing output in September. Right. Aside from pandemic disruptions to the economy, the latest decrease in Purchasing Manager Index (PMI) was steepest since basically just after the recession of 2008, i.e., March 2009. So, just a couple of days ago, the Bank of England halted its most aggressive round of interest rates increase in decades, and basically they didn't raise it to 5.5%. We were kind of forecasting that it would be raised to 5.5%. But what happened was that the basic inflation rates came out and it was a slightly stronger performance this week in terms of economically wise. So they didn't actually raise the interest rates. So the Bank of England interest rates are still on at 5.25%. Obviously, it's still a large increase from the last few years. And that's basically after 14 previous rises, right? So then it says basically yesterday, Mike Bell of the US investment firm JP Morgan Asset Management is talking about this morning's weak UK PMI business survey explains why the bank didn't raise the rates yesterday. It's clear from the weak survey data that the effect of the prior interest rate hikes is starting to bite. The weakness in the key service sector, along with the ongoing weakness in manufacturing, was probably what sealed the deal for the bank. Right. Total new work in the private sector fell for the third month in a row, with firms warning the cost of living pressure and high borrowing costs, alongside cutbacks in the real estate and construction sectors, were weighing on activity. The S&P Global CIPS UK PMI Composite Output Index fell from 48.6% basically last month to 46.8 in September, right? A reading above 50 separates growth from contraction. So Chris Williamson, the chief business economist at S&P Global Market Intelligence, basically said that the reading was consistent with the economy shrinking. Now you might be aware the UK economy is basically stagnating, starting to shrink right now at a quality rate of about 0.4%. 2 consecutive quarters of decline are regarded as a technical definition of a recession. There you go. So it's giving you a technical definition of a recession. And he also said the disappointing PMI survey results for this month mean recession is looking increasingly likely in the UK. So is recession coming? There's a high potential. Underscoring the basically severity of the UK deteriorating situation, September's downturn is the steepest since the height of the global financial crisis, barring only the pandemic lockdown. So separate figures for retail sales in Great Britain show some recovery in consumer spending in August after a washout for retailers in one of the wettest Julys on record. That's true. I mean, most of the summer was just wet and rain, and then the last few weeks we did have a little bit of sunshine. So sales volumes rose by 0.4% over the month after a sharp 1.1% fall in July. Now, the onset economists polled by Reuters had forecast a slightly stronger rebound to 0.5%. Sales in food stores basically were down, drove the recovery, with growth in the volume of sales of 1.2% after a fall of 2.6% in July. So obviously sales in food have picked up since the previous couple of months, basically in July. When supermarkets reported that wet weather had reduced clothing sales volumes at non-food stores grew by 0.6% in August after a fall of 1.2% in July, when poor weather reduced footfall. So Sandra Horsfield of the investment bank Investec said the trend in total retail spending volumes has been broadly sideways. The economy is entering more troubled waters, and a relatively mild and short-lived recession is likely to ensure this winter. So there you go, folks. It looks like a recession is on the way here in the UK. Please do like, share, subscribe, comment below. Let us know what you think. Will we have a recession or not? But anyway, to keep up with all the latest in terms of the financial world, please do like, share, subscribe. Okay, people, catch you in the next one.